In this section, we're going to go over actually analyzing a commercial deal. But first, I want to tell you guys a little bit about how commercial and residential deals are different. So residential deals are 1 to 4 unit. Commercial is 5+, and I'm talking specifically multifamily right now.
Yep.
And then the biggest difference is commercial deals are typically talking cap rates like we talked about earlier. Residential deals do not look at those at all to value it. It's based on sales comparison approach. Commercial, you're essentially buying businesses with commercial, so you're looking at the financials of the property, the cap rates, the NOIs, and all that. And then the biggest difference is loans you can get. So residential deals, you're looking at you personally as a borrower and how you qualify to purchase a property. A commercial deal looks at you still and your net worth and experience and things, but they're mostly looking at the DSCR, how the property performs, and what loan type it can support. So those are a few of the main differences, and then leverage also is a big difference. So with residential deals, you're able to lever deals a lot more because you can own or occupy a property. Commercial, you're not able to do it quite as much or as easily. Before you start analyzing a deal, you need to know some more basic terminology. So we're going to start with OM. So an OM is an offering memorandum. This is a document that brokers have and advertise with a property. It puts in like all the information about like how many units it is, what size it is, some basic financial projections, some information about the area typically. It's them trying to sell you the property and painting the best picture possible. Then we have actual P&Ls, so profit and loss statements. So these are how the seller actually keeps their books and records all their income and expense data. Mm-hmm. Next, we have a T12, which is just the trailing 12. So it's a P&L for the last 12 months. So if you're halfway through a year, 3/4 of the way through a year, it will be through 2 years and just show you the last 12 months. And then we have rent rolls. So rent rolls are just all the tenants' information, what they paid in rent, all their security deposit information, when they moved in, when their lease ends, and all that good stuff. So all 4 of those things is where you collect the actual data from that you're going to use to analyze the property. And this is your preliminary look. It's not the end all be all. So you actually need to go through and verify that data using things like bank statements. So you actually get bank statements from a seller verifying that they're bringing in the income that their P&L says, because anyone can just make a P&L that says whatever. You can also look at their tax returns, so you can actually see what they're reporting as income and paying tax on. You can get estoppels, which are just certificates, not certificate, but a sheet signed by the tenant and by the landlord, just verifying the information that's on their rent roll is true and certifying it with signature. And then you can check their bills too. So you can ask for like, hey, what is your actual electric bill, and request that, or your trash bill or garbage bill or whatever that may be, and make sure it aligns with the OM and the P&Ls.
So the OM and some of the other metrics you talked about earlier, those are going to be largely pro forma data, correct? And then the tax returns and the estoppels, that's going to be verifying and trying to take the pro forma to actuals, or am I thinking of that incorrectly?
Yeah, so the OM is a pro forma. So pro forma just means the projected performance of a property and how it should perform. The P&L should actually show you the real data, and then you want to make sure the tax return aligns with the P&Ls and there's not inconsistencies between them.
So we're getting what the seller is saying, here's what's actually happening, but then we're also trying to get extra data that says, we want to verify everything you're telling us is true.
Yeah, and a step further. So you're going to get what the broker says, and they're painting the rosy picture. Then you're going to dive deeper into what the seller says. Then you're going to dive deeper into what the seller actually reported, and then you're going to verify that data, and then compare it to what you know about how properties perform and assumptions you can make as well.
Trevor, all this is great in theory. Could you maybe take us through an actual deal where you use these numbers and how you did it?
Yeah. So we're going to talk about a 14-unit deal. This is a deal we structured for a client just to give you guys a real-world example of how it happened and all the data that was associated with it. So yeah, this is a 14-unit. It's all 2x1s. They're 800 square feet each. He's buying it for $2.9 million, or he bought it for $2.9 million, and that's $207,000-ish a unit, and it's about $258 a square foot for this thing. So to start out, here's the rent roll you guys can see from the OM. So this is the data the broker put together, and typically rent rolls are pretty accurate. They're not lying about the data too much because you can go get estoppels and verify it. But again, you always want to verify. So as you guys can see here, you have all the different unit numbers. You can see the bed and bath count, the square footage on each unit, and then how much each tenant is paying in rent. and then what the broker is saying the potential monthly rent should be. So right here, you'll see a P&L from the offering memorandum. So this is the data that comes from the broker and paints the picture they want you to see so you can start getting an idea for the property. So diving deeper into it, you'll see there's 2 columns here. You have current and then year 1. So it's how the broker's reporting that it's performing right now, and then how they're saying it will perform when you improve the property via increasing rent or decreasing expenses. So you can see the total gross potential rent coming in, the loss to lease, meaning the amount that each unit is being under market rented for. So they're accounting for that to show the potential that it could be. And then you have your vacancy, and then you have all your pet rent, your utility bill backs, your parking, and then this gives you your effective gross income. Under that, you guys are then going to see all the expenses. So you'll see the real estate taxes, insurance, all your utilities, trash, repairs, maintenance, landscaping, marketing, general things, turnover and maintenance, and then some operating reserves and management fee. As you guys can see here, they're showing that you would bring in about $280,000 in income, and then you would have about $103,000 in expenses. And then you can see how that changes to the next year. So they're showing, hey, you could bring in $33,000 more in income, and then your expenses would only go up by about $5,000.
So Trevor, this is a lot of numbers. Some of them are estimates, some of them are hopefully factual. Are you going to go check all of them to make sure that they're true?
Me, personally, no, because I know how properties perform. So I'm going to check some of these numbers that I may be unsure about, such as the variable ones like utilities and whatnot, but I'm going to come up with my own data for a lot of them. After I go look at a property, I'm going to determine how much maintenance I think it needs, where I think the actual market rate rent is, and some of those. But I'm going to collect as much data as I can from them on the front end.
Yep.
And then if I have questions about it, I'm going to go verify it. But a lot of the time, I'm just using my own estimates because I own enough properties and see how they perform.
That makes sense.
To break all that down for you, the key things that you want to pull away from that P&L, from the OM, is the effective gross income of $280,000-ish, the expenses being at about $103,000, which gives you an NOI about $178,000, which puts it at a 6.12 cap. So in the market this property is in, properties trade around a 5.5 to a 6 cap. So someone may look at this, see there's upside in rents, and it's a decent cap rate, and be like, this is a pretty solid deal based on this data that I'm given so far.
Yeah, off the top of it, it seems like a good deal. But again, we have to go verify all that's correct, because this is what the broker's putting in front of us, right?
Exactly. So then we're going to dive into the next thing we want to do of looking at P&Ls. So again, these are the seller's actual books and the information they have kept on the property.
And to clarify, because we referenced P&L on the previous page, that's the OM P&L, where we're now looking at the actual seller's P&L.
Correct. So the broker will give you a profit and loss statement on their offering memorandum. That's their estimate and their compilation of all this data. Not always the most accurate, so you're going to go get the P&Ls, the actual profit and loss statements from the seller and what they were reporting. Ideally on taxes, doesn't always align, and make sure that data aligns with the OM.
Yep.
Or if it doesn't, figuring out what to do next. So here's some actual P&Ls for you guys to see. As you will see here, we have 2022 and 2024. So I just broke this down so you didn't have to see everything at once, but we have data from 2022, 2023, and 2024, month over month for all of it, but just to give you guys an idea. So it looks pretty similar to what you were looking at before from the offering memorandum, and you have all your different line items, all your different expense info, and then you're again calculating the income and expense data. So what I did on this sheet here that you'll see is compile all that information into an Excel spreadsheet so I could compare the year over year and see what trends were happening and what things stood out to me. So taking a look at this sheet, you guys will see 2022, 2023, 2024 Q1, because that's all we had data for, and then I extrapolated that data over the full year. So I took just that Q1 data, multiplied it by 4, so I could have an estimate for the whole year.
Yep.
And then I broke this down a little simpler just to make it easier for you guys to look at. You might have more expenses and more categories and more line items if you really want, but this will give you the gist of it.
Trevor, is this something, because I know a lot of people aren't Excel pros, is this something where if you were working with someone, you would help them do these things?
Yeah, so we specialize in helping clients actually analyze deals, and we have a bunch of tools that help you just plug in basic numbers and do this, and then we end up analyzing the deals for clients as well. So it's something you don't necessarily have to learn. I highly recommend you do if you're trying to invest over the long term, because it helps you make quick decisions just looking at properties on the market.
Yep.
But it's something that takes time, and you'll learn as you go. So as you guys see on this sheet, I highlighted a few things that really stood out to me. The first one was reimbursed utilities. So in 2022, they had almost $14,000 of reimbursement for utilities, and that number went down in 2023 and down in 2024. So I'm not sure what's going on there, but it does not align with the OM, and it's way off from what they were saying. Next thing you want to look at is insurance. So I just highlighted that because they didn't account for it because they hadn't paid it yet for 2024. Taxes, they hadn't paid in full yet, so that's something to look at as well for 2024. And then the big thing is repairs and maintenance. So looking at repairs and maintenance, their numbers are operating so much higher for 2022 and 2023, almost $90,000 for each of those years, and have only spent $7,000 in Q1 of 2024, which would come out to around $31,000 for the whole year extrapolated. So this tells me a few different things. Either they haven't been fixing up the property at all and it actually costs that much to run it each year, or maybe they went and did a bunch of unit turns and a bunch of capital expenditures. Maybe they fixed a roof that year and turned a bunch of units. So that's something you would have to dive deeper into and figure out.
So you're not saying, oh, these guys are full of crap. You're just saying this is a question, could mean one thing, could mean another, but I'm going to send them a question.
Exactly. It just tells you to look deeper into it and figure out what is going on. And then the next thing you guys are going to see is utilities. So you'll see it's pretty consistent for 2022 and 2023, but in 2024, Q1, they paid $12,000 alone. Mm-hmm. So, and that extrapolates out to almost $50,000 in the year. So that shows you like what is going on here. Like
what changed?
What changed? Is there a water leak and they just haven't picked up on it yet? Like, did they start giving who knows?
Yeah, but it's a question.
It is a question, yes. So then you guys will see at the bottom here, the NOIs for each year. So you can see they actually went down from 2022 to 2023, and then extrapolate over 2024, it would have increased there. And again, we're seeing abnormalities within the data, so you want to dive deeper in and see what's going on. So this sheet is to show you guys the comparison between the OM and then the actual P&L data that we're extrapolating over 2024 and adding things in that they hadn't paid for, such as taxes and insurance. So this is to show you guys, okay, what is the difference between what they're advertising to me versus what it's actually showing it will perform at.
Yep.
So you'll see here, our rents are pretty similar for total income. We're about $280,000 for each. Insurance, it's a little different. I call an insurance agent to get a quote for all the properties so I know what I'll actually be paying on that property versus sometimes they're just taking what they're currently paying, they're making an estimate, but they may be underinsured, so you're not sure. So always use your own for that. And then I'm just pulling the actual tax data from the county records so you can look at that. And then we're looking at repairs and maintenance again. So this is the big thing. So as you guys remember, repairs and maintenance was $90,000 a year and then extrapolated out to $30,000 a year for 2024. On the OM, they were only showing $14,000. So it's not even close to what they were saying or how it actually reported it was performing.
Right.
So that's a big thing to want to figure out again.
Why would there be such a big difference? Like, how does that happen in a process?
The broker wants to sell you the property. So they want to show how it is optimally performing, and they're trying to justify the lowest expense numbers possible and the highest rent possible so they can ideally sell it to you for the most money possible. A lot of that data you might as well just take and throw away because they don't actually know how to go and analyze the data, and a lot of brokers don't know how to value a property. So
do you find that usually it's more the expense side of things that are manipulated rather than the income?
It's a lot easier to manipulate the expenses because there's more line items and it's harder to get that data. Yep. The income a lot of time is literally just what each unit is renting for, making sure there's not late payments that's actually coming in.
Yep.
So it's pretty easy to do. You have some pet rents and things like that, but it's more straightforward than all the expense items that they could be trying to hide, or they could do some of this work themselves. So for example, property management. They could manage the property themselves and account for that and lower their expense data, but you could come in and buy this thing and no, you are not going to operate it yourselves. You have to pay for management. That will be an expense. So the next line item you guys are seeing on here is management. So on the OM, again, they're reporting under what they actually paid in management. So that's the broker trying to say, hey, they're paying too much for management. You can go get management elsewhere at a cheaper percentage, and they're trying to cut down the expenses that way. And then we have utilities. Again, that was one that's a big question on this specific property.
Right.
Why is this costing so much more than they're reporting and what it's been year over year? So big thing you guys can see looking at this sheet again is the broker math came up with about $103,000 in expenses, and I came up with almost $144,000 in expenses. So that's an NOI of 100 that I came up with of 136,000-ish versus their 178,000. With that $40,000, there can be a drastic change in value of what they're pitching versus what this thing is actually worth.
Yep.
We're going to dive into actually using those numbers to value a property later on. Next thing we're going to do is compare the high levels of this. So again, effective gross income of the broker versus what we came up with, pretty similar. Expenses, drastically different, 103,000 versus 144,000.
Yep.
NOI is about $40,000 difference from each other, and what this tells us in cap rate terms is the biggest difference. So again, they were saying this is a 6.12 cap at that $2.9 million price, and me taking this new NOI of 135,858 and dividing it by that $2.9 million price, this tells me this is a 4.68% cap rate. So again, if I paid all cash for this property, I would have a 4.68% return, and they're saying I would have a 6.12% return. So having a cap rate this different is pretty drastic. We're pretty far off from what they were saying it's performing at versus what we think it actually will.
And again, we need to go ask those questions because this is like the range of what the cap rate could be depending on the answers that they give us, right?
Correct. So this is just the first look. We could go back to them and they could have perfect explanations for why the expense data is why it is, why the utilities are that way. That could solve the problem for us, but it shows us we need to go look at it and figure out what the discrepancies are.
Right.
So at this point, you would check those discrepancies by actually looking at bank statements, tax returns, getting estoppels to verify rents, and then checking actual bills. So we may ask for those utility bills every single month for the last 12 months to see what is going on and verify our numbers versus theirs.
Right, because you don't assume this about people, but it's pretty easy to make up a P&L and change data and make it not accurate, correct?
Yeah, anyone can open Excel, go type in whatever they want, print it out, and give it to you.
But they can't really, at least not as easily, change a utility bill.
Correct. So that was us covering how you actually come up with an NOI on a property and analyze the data. We're going to go over valuations next section. If you just want to skip ahead and have us help you purchase properties and run through all these numbers, click the link below in the description.